All right. Hello, everyone. Thank you for continuing to join us throughout the day here during the Lytham Partners Spring 2024 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners, and I'm extremely pleased to be joined during this presentation of S&W Seed Company. The ticker symbol for S&W is SANW, and participating during today's presentation is Mark Herman. Mark is the company's Chief Executive Officer, and Vanessa Bowman, the company's Chief Financial Officer. Before I do turn it over to Mark to walk through the slide presentation, I just want to remind everyone that if you'd like to schedule a one-on-one meeting throughout the conference, and have not done so already, please send me an email. That's Blum, B-L-U-M, as in Mary, at lythampartners.com, or you can go to the conference landing page for the for the conference. That's lythampartners.com/spring 2024. From there, you can click on the investor and attendee registration and make your one-on-one selection to connect with Mark and Vanessa here. So I do want to remind everyone that the company will be making forward-looking statements throughout the presentation today. So please adhere to the forward-looking statements on your screen, as well as those published in connection with all the SEC filings that the company has provided out there. So with that, Mark, I want to turn the presentation over to you.
Hey, thank you, Robert, and thank you all for deciding to spend some time with us to go through some of the exciting things going on in S&W Seed. As Robert said, my name is Mark Herman. I'm the CEO of S&W Seed Company. As we look at several of the moves, as I came in about a year ago, was streamlining the organization's focus, and we've really drilled down into our high and our mid-range margin product portfolio, and then how we drive that for success in the marketplace. I'm going to talk quite a bit of detail about our sorghum trait portfolio, both as it impacts the U.S. market as well as global. And then as we look at alfalfa and the forage position that we have is a solid mid-range forage. It'd be a mid to lower range margin category as we look across the pasture products, particularly in Australia. And then the exciting position of Camelina as the Vision Bioenergy Oilseeds came together with the JV with Shell. So I want to start with the sorghum trait portfolio and drill a bit down into it. Our key strategies as we came together, and Vanessa's on this call and we'll talk later. Vanessa joined approximately the same time I did last spring. But we've got a robust sorghum technology portfolio that's highly competitive, brings significant farm value that I'll talk to, and has had great success over the last 3 years. It moves sorghum to approximately a 60% plus margin product line, which is exciting, and we'll drill into it in more detail. We also implemented a series of initiatives to drive towards increasing profitability in the near term, and really focused on becoming best in class in seed company operational effectiveness. And that really extended both with our operations here in the U.S. With our sorghum business, as well as the alfalfa business and the Australia domestic business. We also looked at discontinuing or partnering on non-core business or operations that really weren't seen to be able to contribute to positive gross margins in the near term. Some of those would include the stevia program that we shelved, as well as exiting a JV we were in the Australia business around wheat, as well as looking at other businesses and activities that aren't going to contribute to the near term. We signed significant partnership with Shell that I touched on just briefly, that I'll talk a bit more about. And then a focus on near-term cash needs, which were funded by non-dilutive payment from Shell of $6 million that we received last February. And we'll talk more about our ongoing cash and move to profitability going forward. So with that sorghum technology, as we look at the sorghum technology, you might ask why sorghum? And it's pretty interesting. Sorghum is the 5th largest cereal crop globally. It's used as a substitute for many grains on the market today. You know, there's approximately 15.5 million acres that we have the ability to target from the U.S. business through both our branded business in the U.S. and licensing both U.S. and X that I'll go through in more detail. And we're also uniquely equipped with, our sorghum is uniquely equipped to be able to handle higher temperatures. We've talked quite a bit about this, but as we look at the concerns with climate change, higher temperatures, limitations on water, sorghum is a fantastic sustainability crop for food security. Until S&W's development in sorghum technology, sorghum unfortunately has been a crop that has been void of significant research investment that can both make a step change in improving the crop's productivity, but farm profitability as well. And then as farmers increasingly recognize the value of these new management tools, I mentioned a moment ago that there's 15 to 17 million acres globally. We really believe as we invest in bringing more tools that reduce risk, increase productivity on farm, that we believe we can drive for increasing sorghum acres as we move forward due to the positive impact it has around food security and sustainability. So if I move into grain sorghum as well, as you compare it with a key crop that it often competes with corn, if you look at the cost of input, which is the gray portion of the graphs, and then you look at net return, and then you look at return on investment, sorghum is much more efficient as far as cost to put in a crop, raise a crop, and you look at the return on investment for grain sorghum per acre, it's a fantastic option economically for farmers as well. So if I get really right into our trait technology pipeline, as you look at sorghum, we've got a fantastic depth in the product line. You know, there's only a handful of seed companies that have successfully launched a trait in a seed product. And as we look at where S&W is today, we've had great success in launching DT grain sorghum in the marketplace, which enables grain sorghum to utilize tools such as First Stack to spray over the top to control grassy weeds. In grain sorghum, it's very difficult to control grassy weeds because ultimately grain sorghum and corn are both from a grass family. So anything trying to kill the weed is also trying to kill the crop. This resistant position with this technology is a great tool to allow farmers to control grassy weeds within their grain sorghum. We also this year launched DT forage sorghum as the second trait in our pipeline. And as we look forward, we'll have prussic acid free, which enables the crop to remove durin, which is a precursor to prussic acid. Prussic acid is basically like a cyanide to ruminant animals and can lead to illness and a pretty rapid death. And then DT2 will also be launched in 2025. And DT2 will allow for a wider window of application. DT1 currently needs about 12 inches growth to be safely applied with herbicide control. And then the next one is the very exciting DT prussic acid stack that will be coming and launched in 2028. And this stack will allow farmers to be able to take advantage of controlling grasses as well as controlling prussic acid. So they'll be able to take advantage of both those high value positions in the marketplace at the same time. So as we look at the portfolio of sorghum technologies as we move forward, it's extremely exciting for where we're at today. If you look at the double team trait technology for DT, I mentioned that DT allows you to control grassy weeds. So as a visual, the picture that's on the left, the untreated sorghum, this would be a field that would be pretty typically run over with Johnson grass, shatter cane, and other grassy weeds that have a huge detriment to yield because they cause competition for the grain sorghum plant for both moisture, nutrients, as well as sunlight. If you look at the right-hand column is a treated field with the double team technology. And this is where the sorghum is tolerant to the first act herbicide, and grassy weeds are able to be completely eliminated from the field. So it's pretty easy to visualize the value if you're an operator. And really, it's the financial value as you look at protecting yield. It's also just a physical value. You can imagine combining through the grassy mess of the field to the left, as well as just removing risk. The yield loss can range from 5% to complete field devastation from grass pressure. So then if you look at forage sorghum that's commercially launched in 24, we had good trials out this year and a pretty significant volume for a first year. But in forage sorghum, it's also the same benefit as controlling the quality of your feed stuff as you move forward. And then the next step for the DT platform is DT2, which will be launched in 2025. And as I said before, it'll add even more value to farmers, allowing them to spray earlier during the crop development safely to control weed pressure in that early crop growth. So the next slide is extending the sorghum trait portfolio. Prussic acid free is a tremendous technology as we move forward. It's licensed from Purdue University, and we as S&W have it as a licensed technology exclusively. As you look at the anticipated full launch in 2025, we had at a fairly broad trial position this last year, so we'll get quite a bit of visibility from it. But this technology removes the naturally toxic metabolite from stressed forage. So you can get stressed forage either through short-term drought periods or through frost. But it allows for the grain or forage sorghum to be grazed with livestock worry-free, to where you don't need to worry about plant health, weather conditions that could put the sorghum under stress that would make it toxic, or a quick freeze. You know, a high value we really see in this prussic acid free is with grain sorghum. So a farmer could come out and harvest the grain sorghum and then immediately put a hot wire around the field and put cattle into the field to graze on the grain sorghum plant, which still is green and can have some regrowth safely for the rumen animal. And there's not a fear then that during harvest, as you're still busy, that you get a freeze and you've got animals in the field. This will lead to a worry-free grazing opportunity. So then really the thing I'm extremely excited about is once we stack it double team with prussic acid free, then farmers are going to be able to control grasses, which will be important because Johnson grass and shatter cane also contain durin, which can lead to prussic acid. So by having the grassy weeds controlled within the grain sorghum field, as well as prussic acid free, you get the high value of both as a farm operator, and they're not in a position of having to choose one of the two technologies as they move forward. So an extremely exciting trait pipeline in sorghum that we believe will add significant value as we go forward. So when you look at double team and delivering increased yields, and I would add to this, reducing risk on farm is an extremely important part for farm operations as well. But there's estimates in the industry that grassy weeds rob about 7.5 to 15 bushels an acre. So the yield loss ranges from total field devastation to a 5% yield loss. If you do the math with that on the 6.5 million acres, it's in the range of $170 to $350 million of farm productivity due to yield loss to hard to control grassy weeds. You know, double team protects farmers' yields and production and adds to what I would say is sustainability through producing more with less. But it's an important value proposition, which does explain why we've seen such fast adoption of Double Team over the last 3 years. So as we've moved forward with Double Team, we've done some market research which looks at Double Team brand comparisons for grower survey. So this was done on a brand health survey of about 250 respondents from Colorado, Kansas, Nebraska, Oklahoma, South Dakota, and Texas that actually utilized the system last year. And it's impressive feedback from actual users. Almost 80% identify it as much better to somewhat better than their other sorghum options, but an extremely high rating of feedback from growers. And it does explain, as we monitor growers from first-time use through increased adoption, why we've seen such a fast rate of growth and penetration of Double Team in the marketplace. The fact that growers are highly satisfied with Double Team also received feedback of being superior grass control for sorghum. Double Team delivers positive return to investment, increasing overall profitability. And then feedback from growers is very positive on value, satisfaction, and performance. As you look down the numbers, it's a level of satisfaction that is extremely high and explains the continued growth. But 100% of growers that use Double Team said that they were satisfied with the grass control. 100% who tried the Double Team system said they would be increasing acres in the coming year. 85% of growers who use Double Team stated that they were satisfied with the performance, and 87% of growers saw value in Double Team. And 100% of the growers said Double Team was an easy system to use. It's just impressive the feedback that we're getting from the farmers that have moved quickly to trialing and adopting the system. So then as we look at Double Team commercialization and our approach globally, we're definitely going to drive sales through S&W own sorghum partner brand, where it's currently in the market, which would include the United States, Mexico, as well as we have an S&W brand in Australia. In the other spaces, we're going to align with independent seed companies. And in fact, in the US to date, we have 15 other independent seed companies that currently have a license to represent our trait in the market as Double Team. But we're also expanding as we work with key markets in Mexico, Brazil, Australia, and Argentina to also extend our licensing arrangements with independent seed companies. And I said before, this allows farmers to be able to continue to buy technology that contributes to the profitability on their farm through seed companies and seed distribution service people that they trust and know, which will help both accelerate our trait portfolio penetration globally, and also avoid the need for significant OpEx spend to put people in place to establish brands within these other geographies to expand our reach. We've got several communications going on with key seed companies in each of these markets that already occupy either strong germplasm, strong market share within the geographies, and obviously a great service team to meet farmer needs that we're excited about. This next slide is a picture of Argentina herbicide tolerance spray trials. So as we work with our key partner, Adama, we've got 2 steps for expanding into each market. One is we need the chemistry testing and registrations completed, as well as then working with a seed partner that either has germplasm that we incorporate our traits into or in-license our germplasm and trait to move into these marketplaces. But internationally, we've had some exciting things here recently. One would be the Argentina herbicide trials coming out, which show Double Team being very effective with key grass herbicides that are currently registered within Argentina. Also, just recently, we received DT received its patent in the country of Mexico, which was also a very positive development. But we're continuing to move forward with each of these discussions. And we do see that as we move to the future, our international position ex-US will be very important to our continued growth as we look in the 5 and the 10-year growth plan. So the next one is multiple growth drivers. So continue to drive double team grain sorghum adoption through sorghum partners brands in the US and license agreements. Launch new technology products in the US with the 2 key products set to be commercially introduced in the next 2 years, double team forage and prussic acid free. It's very exciting as well to introduce the first stacked sorghum trait by combining double team and prussic acid free in a single seed option, which I touched on earlier. Expand internationally through branding and licensing in Australia and Mexico, and through licensing agreements in other key international sorghum markets, such as Brazil and Argentina. And then growth in sorghum acres expected overall. So I spoke to the fact that sorghum has not benefited from significant research investment in new tools that farmers could utilize. We do believe with these new tools that can protect yield, effectively giving increased yields to farmers, significantly reduce risks for sorghum production. We do believe these tools will drive for more sorghum acres as we move forward. And with sorghum's very unique ability to adapt to less water and higher temperatures, it's a fantastic crop for sustainability and return on investment as well. Sorghum technology overview. So if we look at where we're at in the trend line, I mean, the sorghum technology portfolio has been incredibly fast growing. It's a high margin proprietary product, and it's differentiated technology than what's been available in the past. You don't really have to take my word for the value of DT. You just need to see the adoption with farmers. In 2022, S&W Seed had about 5% share in grain sorghum germplasm footprint with sorghum partners brands. Today, S&W technology germplasm and traits are on more than 11%, or will be on a 10 to 11% of US sorghum acres in just a 3-year period. It's just an impressive growth trend line. As you look at the right-hand scale, it shows share of market, and in 22 and 23, actual share of market of DT in the marketplace. 24 is our best forecast right now as we look at being at 11% market share. And as we build our forward-looking growth, it's just a continued steady growth that we've seen to date, which is really supported by farmers moving from trial to increasing their adoption. But we right now believe we can work towards in 2027 having 25% share of DT sorghum across the US. And then on the left-hand side speaks to the dollar of sales between conventional sorghum and DT sorghum in the marketplace. With that, I talked as well about at the beginning that we have 2 IP platforms. We also have the intellectual property platform with alfalfa and forages, which I would put in mid-margin category. As we look at this, it's a proprietary alfalfa seed and pasture product, addressing non-US global markets. On the international alfalfa and forage, we have a strong diversified alfalfa production and distribution. I mentioned at the beginning as well, looking at all the operational improvements and efficiencies to make sure we're maximizing profitability. And then lastly, with US alfalfa and forage, the long dormant alfalfa history, we purchased the germplasm pool from Pioneer, consisting of thousands of unique breeding parents and varieties, and with emphasis on high yield forage quality, developing alfalfa varieties with resistance to diseases and stress. And then we're focusing on driving operational efficiencies as well through the US alfalfa and forage business. So then the next category I talked to is the exciting biofuels JV that S&W formed with Shell. It's utilizing camelina to move towards SAF fuels and biodiesels as a feedstuff for oil production. I think probably most know the valuation as we went forward with Vision Bioenergy Oilseeds as a JV, but Shell paid $20 million, which S&W received $13 million cash. From Shell, $7 million upfront and another $6 million in February of 24. Plus there's a $7 million for the Nampa facility debt payoff. There was $25 million contribution that Shell put forward as $13 million upfront for cash flow purposes, and made an additional $12 million cash contribution in February of 24 to fund operations. And at the end, S&W owns 34% of the JV with Shell, owning 66%. Vision Bioenergy Oilseeds is a fully integrated company with upstream business models. So there's genetics and breeding to really develop plants that perform well for farmers and have solid productivity. There's seed production that VBO will lead, and then there's seed processing, packaging, and shipping. As you look at the fully integrated system, it goes from contracting acres with the farmer, getting agronomic support, as well as the grain aggregation and shipping. Then Shell has a commitment within the JV to be the offtake of all the seed that's produced or all the grain that's produced, move it to crushing facilities, create camelina oil that'll be used for either renewable diesel or sustainable aviation fuel. And then the meal will be moved as a high protein animal feed to animals. VBO recently also signed a license for glufosinate resistant camelina trait, which the research team is moving all its efforts to integrate into high value germplasm and hybrids for commercial use. Glufosinate is a broad spectrum herbicide that when utilized with resistant crops provides an effective over-the-top weed control system. So all VBO development efforts are now pivoting to fast track this high value trait into leading products to offer growers. Concurrently, VBO will be putting out pre-commercial demonstration blocks to highlight this technology value with farmers in 2024-25. Move to commercial launch for its limited trial in fall of 2025, and then full-scale plantings in 2026. With the significant technology advancement, VBO has decided not to expand conventional camelina, to focus on launching this breakthrough glufosinate-resistant camelina trait technology. Further, VBO has a technology pipeline in development to continue to advance high-value products, which will contribute to biofuels in the future. With that, I'm going to turn it over to Vanessa to review the financials.
Thank you, Mark. As we look at revenue, what you see before you is a year-over-year comparison for quarter three, as well as annual sales starting with 2020. Looking at year-to-date quarter three, we do see a downside in sales starting in 2023. It was $50.5 million. And in 2024, quarter three year-to-date is 45.6. If we think about it from a geographical standpoint, there was upside in the Americas and then downside in Australia domestic and international. Looking at the Americas alone, the year-over-year quarter three year-to-date increase was $3.5 million. Looking at Australia domestic, the downside year-over-year for quarter three year-to-date was $2.3 million. And in international, the year-over-year downside for quarter three year-to-date was about $6 million. So with the Americas Mark talked about the DT momentum. Of the $3.5 million increase year-over-year for quarter three, about 2.9 of that was directly attributable to DT sales. The remaining amount was due to non-dormant alfalfa sales in Mexico. Year over year, there was an increase there as well. As we look at Australia domestic, the downside, as I said, was 2.3 million. About half of that was due to cereals downside, as well as the other half of that was pasture grasses. Both were constrained by supply in 2024 versus 2023. And then as we turn to the international business, I mentioned that the downside year over year was $6 million, directly attributable to the geopolitical challenges that we've seen throughout 2024, both in Sudan and the Middle East, primarily Saudi Arabia. With that downside, year over year, we've adjusted guidance. Originally, it was 76 to 82 million for 2024 full year. We've now adjusted that guidance to 67 million to 70 million for the full year. If we broke it down geographically, 6 to 7 million of that guidance change is directly attributable to the activities we've been talking about throughout 2024 in the MENA region. And the other 3 to 4 million will come from our Australia pasture products. While revenue is down, as we look at gross margins, we have a great story. Looking just at Q3 year to date, 2023, we had a margin of 23.2% globally. And looking at 2024 Q3 year to date, that grew to 29.2%. And the reasons are twofold. The DT sales that we recognized year over year, those increasing at an average rate of 60 to 65% margins are about half or closer to 2/3 of that increase year to year. And the other component of our increase in margin is holding to our value proposition in non-dormant alfalfa. While volume is down, we are and have been able to sell at the higher premium valued pricing levels in that MENA region. And the other last component that is attributable to gross margin increases are the cost savings that we've been executing throughout 2024. So we've remained in our guidance. Previously to Q3, our guidance was 24 to 26% for the full year. And we're sticking with our guidance currently for the full year at 24 to 26%. Moving on to EBITDA. We do have a change in guidance for EBITDA, directly attributable to the sales downside that we talked about earlier due to volume. And that change has resulted in a new guidance of 6 million to 8.5 million, while holding all expectations for OPEX steady as we initially budgeted for the year. Moving on to the balance sheet. For quarter end, March 2024, no significant events impacting us from a balance sheet perspective. However, there were a couple of inflows from a cash perspective that were recorded in Q3 that helped our liquidity situation for the remainder of the year. The Shell joint venture, we received 6 million in February of the quarter three. And that was to secure the ownership split between Shell at 66% and the S&W Seed ownership at 34%. And that would be the final payment expected to secure that ownership structure. Also, as we've discussed in our earnings call, we have sold our 20% share of the Trigall JV back to Trigall, and as a receipt for that, the cash received was 1 million for the working capital contribution from Trigall, and then the remaining 400,000 was a transfer of assets to the Trigal JV now that we've sold our 20% share. And then we've been in discussions with the National Australia Bank and received extended credit facilities from them in November of 2023 through March of 2025. And that's all from a balance sheet perspective. I'll turn it back over to Mark.
Hey, thank you, Vanessa. And I want to thank everybody for listening to our review of S&W Seeds. The last thing I would touch on is our leadership team. And as you look at our management team, it's a group with a deep history, expertise, as well as successful careers in the seed industry that goes back decades for all involved in the management team. The board of directors, we've got a very strong board of directors with a cross-section of skills that contribute significantly to the guidance of S&W as we move forward. So with that, I want to thank you for joining us and appreciate your support.
Fantastic. Mark, Vanessa, extremely detailed presentation. Greatly appreciate it. Obviously, I would encourage everyone that is listening to the presentation, if you'd like to schedule a one-on-one meeting with management here, please send me an email. Again, that's Blum, B-L-U-M, @lythampartners.com, or once again, you can visit the landing page for the conference website. That's lythampartners.com/spring 2024. From there, you can click on the investor and attendee registration button and make your one-on-one selection. So Mark, Vanessa, once again, thank you very much for the detailed presentation. Greatly appreciate it.
Thank you.